Hey folks, welcome to a special edition of the Research Center by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, folks, what I want to look at is a positive bias we're issuing on crude oil, alright, at these levels of around $54 a barrel. And we're going to go into a couple different reasons. Some are going to be focusing on pure technicals, some on our proprietary indicators, also others on some basic fundamental issues out there that are going on in the economy right now and around the world. So I want to focus on that overall and just give an overview of why we're issuing this strong positive bias on crude oil at these levels. Now, again, just focusing in on the Research Center, folks. The Research Center is primarily for our premium subscribers, and you can join it at InTheMoneyStocks.com under Research Center. It gives you all the technical levels to a T of all the different things out there, whether it's commodities, the dollar, or the general markets. All of that is available at InTheMoneyStocks.com. Now, let's get right into this USO. I want to focus on the United States Oil Fund on a chart basis and really focus in on what's going on out there with crude oil. Before we get into the pure technicals, I want you to just kind of eye this chart on the USO, and I want to talk about where it's come from. Now, you guys that have been watching our free videos back on when they were on YouTube before we put them into the Research Center and combine them into for our premium subscribers know that right when oil was between 140 and 148, the high, we had gone extremely bearish on oil, seeing proprietary indicators signaling a hard sell-off, and at that point, we made a call that by the elections, oil would be underneath $100. Sure enough, oil went far below $100, but again, at that time, you could just look at the positive nature of everyone out there, and we were going against the crowd there. And I want to just point that out as oil came all the way down below 100 by the elections, even below 75, now hovering at around $54 a barrel on this November 18th, Tuesday, 2008, as I do this video. Okay, now let's talk about this chart, because the USO, which is the United States Oil Fund, will give us a general picture of the chart, where oil's come from and where oil's gone. Now, this is the daily chart stretching back to late July, August, and you can see it was over $100. Now, the high on the USO spanning back here into mid-July, June, July, you can see was a high of $119 per share. Now, that gives you a general sense when oil was 148 where the USO was. So, from that point of $119 on the USO has fallen down to now trading at $44.70 as of the close on this November 18th. All right, going back to where it is right now is the key, folks, and I really want to bring this into focus, because when it comes down to it, it's all about what the technicals are showing and what the fundamentals are of the underlying commodity and the economy, because it's a global issue now. It stretches between the dollar, it stretches between extreme oversold and sold nature of the commodity, even further to the election syndrome that we talk about as far as OPEC and Russia combined. So to start things out, it's just the pure and simple basics of the chart are an extreme oversold nature, and I'm going to show you that on the weekly chart in a minute, but first I want to talk about a couple other things, all right? Number one, the dollar. Now, the dollar, we're seeing some signs that the dollar is getting a little toppy here and may be up for pulling back. Now, as we all know, oil and other commodities are trading in dollars. So if the dollar begins to fall in natural occurrence, the price of the commodity must increase. All right, that's the general nature of the dollar fluctuating. It's very inverse to the price of oil and all other commodities as well. So that's number one. So watch for that. All right, if you do see weakness in the dollar, that will generally bring the price of crude oil up off these $54 a barrel type prices, and the USO off this $44 per share area. In addition, what I want to talk about is the election syndrome. Now, we talked about this, and we've used this for years, folks, but there's a general nature when a commodity, especially oil, we've noticed it with oil upon the last few elections, that when you have a move up on such a thing like oil where it's hurting the economy prior to the election, as much as a year to 6 months prior to the election, prior to that election, you'll see a sell-off in that commodity as the price naturally comes down into the election. It's what we call the election syndrome. And on crude oil, it's worked to a T the last two elections, main elections. All right, you can go back to a few years ago on one of the main elections, and then this election as well, to a T, as we had called for it. Okay? So the election syndrome now is passing. Once you get past this November portion where the election was, you should see a general increase back in the commodity or bounce in the commodity. Now, the other issues I want to talk about are the OPEC-Russia issue. Now, the economies here, and this is a fundamental basis before we get into the hardcore technicals. The idea here, folks, about OPEC, these OPEC nations and Russia, was that they based their economy on a certain price in oil, and that price was between $70, $80, at least that's what they're stating, that they could function in their economy, their economies would function off of that price. Well, we're far below it at this point. After Russia basically saying that they needed $70 oil for their economy to function, now we're at $54 a barrel on oil. And don't think and don't underestimate these countries in focusing on something to bring that price up. Just like the United States is bailing out basically the financial system, if not the motor companies, the car companies, to do whatever they have to do to increase the economy here and bring it back to the point where it's not going to be so devastating. Those countries will have to do what they do, and they're going to look after themselves first and foremost, and that's important to realize. Trust me. I mean, just think of it from a natural point from the U.S. The U.S. is doing what they have to do right now to make sure that we survive this downturn. The other countries will do, in turn, what they have to do as well. So watch for something on those to come out, whether it's another cut by OPEC or Russia doing something or something in that regard. Okay? Number 3 here, number 4, I want to talk about drilling costs. Now, oil is not, especially in this recession, global recession, there's not that over demand for oil like people had feared. That's a no-brainer right there, that you're not having that. What you are seeing here, though, is that the oil in the easily reached areas of the earth is now getting exhausted. So what happens? Well, the drilling becomes in the deep sea areas that cost a lot more, and it's a supply and demand issue. Those of you that are economics majors or have taken economics courses, or those that are just watching this video, need to understand that for a company to go out and drill and for it to cost a certain amount, it has to be worthwhile in the profits that they see they're going to get out of that, all right? Now, for instance, for every barrel of oil to drill in deep seas of the ocean, if it costs $70 a barrel just for them to drill there, they're not going to be doing that drilling right now based on a $55 price, $54 price in oil. It's just not economically sensible to their company. They're not going to turn a profit. In fact, they're going to lose $15, $16 a barrel at current prices. Now, I'm just throwing that number out. I don't know what that number is, and I'm sure it's a lot lower. But my point here is that it has to be economically sensible, and the more that they have to drill in these deep sea areas to find oil, which apparently is still abundant out there. I don't disagree that it's not abundant, but that's another issue you have to realize, is that the cost of the drilling is going up. Therefore, natural occurrence will be to not drill as much until the price comes back a little bit, okay? So there has to be an equilibrium. Just like the pendulum I always talk about in the chat room, the pendulum swings one way too far, and it swung way too far at $148 a barrel, by far, far too much. Now it's swinging the other way, and it's going a little too far. So watch for that. Okay. The other thing I want to talk about here is going into the technicals. Now, we're looking at the daily chart here on the USO. You can see the drop that it's had. I want to talk a little bit about divergences. Okay. So let's talk a little bit on that and focus in on the divergences. Now, what you're looking at here is a chart of the USO, again, on the daily, just like we were showing before. But what I want to point out here is the divergence on the MACD beginning to show up. Look at this divergence here as the price comes down, bounces, and goes even lower. You have a divergence here that's actually gone up. Alright, and flipping to the next chart here, you can see that divergence drawn with the yellow line as price declines. That's called a positive divergence, and that's one thing that we generally look at. We don't use the MACD or the RSI or the stochastics in any other way. We don't like to use them for oversold or overbought, because generally things can remain oversold or overbought for a long period of time. In fact, if you had gone off the oversold or overbought on crude oil, well, look at that. Here's very oversold on the stochastics, for instance, or the MACD actually, and you can see that you're going lower, and it didn't matter much. So we use divergences to start to signal that, and now you're starting to get a divergence on the MACD here. Now, let's look at the RSI. RSI, same thing. Notice down here, when the price was higher, it was lower, and now you're seeing a beginning of divergence. So that's something else to watch. There it is on the chart. That's both positive little signals, all right? The stochastics haven't shown up that much, so we're going to continue to watch that. But in any case, let's flow to the weekly chart now. I want to show the weekly and the monthly, because there's a couple key things on the weekly chart I want to point out. Number one, all right, if you take, and these are calculations, some proprietary calculations that we do, some simple ones at that. We don't divulge the proprietary stuff, the hardcore proprietary, obviously, for obvious reasons. But if you take the top of this to the low before this 2-week bounce, all right, and calculate this distance from here to here, all right, and then you take the bounce high from here and calculate it to the lows, this is now almost equal. This distance from this point here, all right, let's erase that line, from this point to this point, and from this point to this point is now almost equal. From here to here is 46 points on the USO, and from here to here is 45. So as symmetry comes into play in the markets, and we're big believers in symmetry, you have to watch for that, okay? And we've calculated out, and I'm going to show you on the monthly chart, that there could be a little more downside, but for the most part, it looks like this USO is getting to that point. And if you take that $46 handle and drop it one more dollar, what price do you come into on the USO? You come into right at the lows of the low from 2007 right here. So notice where we're just above it right now, coming right into that low, and here you have on the monthly chart going back to 2007, early 2000, that low was approximately $43 or so, give or take, on the USO. So that's one signal you got to also look for that's converging now. You have the symmetry on the weekly chart, and it's also coming right into that 2007 low. We've calculated it out, and it looks like our proprietary signals are showing a bounce on crude oil through the first quarter of 2009, possibly as high as $84 a barrel on crude, which would equal approximately $66 to $68 on the USO. That's what we're looking for, folks, and there's a lot of other proprietary indicators showing a bounce here, but those are the ones we wanted to share with you this evening as we again issue a positive, strong positive bias on crude oil at these levels. Take care.